Adam, can you explain to me the euro's performance yesterday? 1.5% drop against the dollar, biggest drop in 3 months. What was going on yesterday in particular?
I think what you see is essentially euro-dollar has come back to be dominated by general dollar direction. The markets, I think, had already come to the conclusion yesterday that the Greek issue has been dealt with, although we'll get any amount of headline noise over the next 2 or 3 days. And over the weekend, I think markets have now come fairly squarely to the conclusion that the issue has, for the short term, been dealt with, and we're back to watching the US data and watching general dollar direction as the dominant driver of euro-dollar.
Do you share that view that the market does believe that, you know, Greece is essentially sorted out? Is that premature, or is it now taken as a given?
I think that's probably the right conclusion, and there are certainly stumbling blocks. Today's meeting, tomorrow's summit, the Greek Parliament debate over the weekend, and the vote on Sunday or Monday. But I think the right assumption is that all of those hurdles will be cleared now, and that we can move on, as I say, at least for the short term, to look elsewhere for direction. And from my perspective, that's basically going back to watching the US data, the payrolls numbers next week in particular, and the debate over whether or not the Fed raises rates in line with the 2 hikes it has in its own dot plot.
And Jerome Powell, of course, the Fed governor, Adam, yesterday saying that it's roughly a 50-50% chance of a rate hike in September, with another one at the end of the year. Are you in that camp?
We are. So we think the Fed starts on this gradual road to normalisation at the September meeting, and a steady rise in rates from there onwards. That's still significantly sooner than the forward curve discounts, and leaves us with an overarching theme that the bullish dollar trend that dominated the second half of last year can resume in the second half of this year.
But how much further can the dollar rally, given that we've had Fed officials state that, you know, the dollar's strength isn't exactly beneficial to the US economy? I mean, how much further does it have in the tank, this dollar rally?
For me, the official concern on the dollar is more about pace than absolute level. If we look at the main valuation metrics for the dollar, it's risen, but from deeply, deeply undervalued levels, and is still, if anything, somewhat undervalued in terms of the US's competitive position with the rest of the world. So I think outright levels of valuation are probably not a major concern. We see more concern if the dollar is moving at a pace which is seen as threatening financial stability. So as a steady, gradual appreciation from here, I see few constraints on that.